Has Nvidia's stock rally come to a standstill? This year, we've seen Nvidia's shares on a scorching rally, but it looks like that might have hit a speed bump. On Tuesday, the shares took a significant dive, dropping by 5.3% to $687.91. If this downturn holds, it could potentially be the largest percentage drop the company has seen in over 8 months. Nvidia, the renowned chip designer, has been at the very core of the frenzy surrounding artificial intelligence, or AI. Earlier this year, the company's stock surged by more than 40%, helping it replace Alphabet as the third most valuable U.S. company, trailing only behind tech giants Microsoft and Apple. As of last Friday, Nvidia's market capitalization stood at a whopping $1.79 trillion. However, the recent slump in stock value has left investors questioning if the company's quarterly results will be strong enough to justify such a towering valuation. Frank Lee, head of technology research at HSBC, has voiced these concerns, stating, "The market is maybe a little bit hesitant whether they, Nvidia, can deliver a strong enough guidance to reinvigorate the market even higher." But as we all know, the stock market is a game of wait and see. With Nvidia set to report its quarterly results soon, all eyes will be on the tech titan. Will its earnings and revenue meet, or better yet, exceed expectations? Or will the investors' fears be realized? Will the upcoming quarterly results justify Nvidia's high valuation? The answer lies just around the corner. How does Nvidia compare to other tech giants in the market? Now that's a question that's been on the minds of many, and it's a good one. Nvidia, the high-flying chip designer, has been at the very heart of the artificial intelligence frenzy. Its stock has seen a surge of over 40% this year, a pretty impressive feat if you ask me. This surge has led Nvidia to replace Alphabet as the third most valuable U.S. company, only trailing behind the tech behemoths Microsoft and Apple. As of last Friday, Nvidia's market capitalization was a whopping $1.79 trillion. Yes, you heard that right, trillion with a T. But it's not all smooth sailing. The market is showing signs of hesitance about Nvidia's ability to deliver strong enough guidance to push the market even higher. As Frank Lee, head of technology research at HSBC, put it, the market is maybe a little hesitant about whether Nvidia can deliver, and the stakes are high. Nvidia's stock has been on an eye-popping run this year, reaching new peaks and powering gains in U.S. stock markets. But such a high-flying performance could make the stock vulnerable if the earnings are anything less than stunning. In the words of Dennis Dick, a trader at Triple D Trading, Nvidia can't just meet or slightly beat expectations for the stock to go higher. They're going to need to blow it away. So where does this leave us? Well, it's a classic case of wait and see. The market is waiting with bated breath for Nvidia's quarterly results. The question on everyone's mind: will Nvidia deliver a performance that justifies its towering valuation? Only time will tell. What do analysts expect from Nvidia's upcoming quarterly report? Well, let's delve into the numbers a little. For Nvidia's quarterly results, due on February 21st, the market consensus is anticipating earnings of $4.56 a share. That's not all. Revenue is also projected to rise, skyrocketing to an impressive $20.378 billion from a comparably modest $6.05 billion a year earlier. These estimates come courtesy of LSEG. However, there's a catch. Despite Nvidia's stellar run this year, which has seen it scale new heights, the stock could be vulnerable if the earnings turn out to be anything less than spectacular. The stakes are high and the market's expectations even higher. As Dennis Dick, a trader at Triple D Trading, aptly puts it, you can't come out and simply meet or slightly beat for the stock to go higher. Nvidia's going to need to blow it away. The pressure is on and the market is watching closely. Nvidia options are pricing a swing of about 11% in either direction following the results, according to data from options analytics service ORATS. The company has been a beacon in the frenzy around artificial intelligence, and its performance could have significant ripple effects across the industry. Other AI-focused stocks, such as Supermicro and ARM Holdings, have already taken a hit, falling 11.6% and 7.3% respectively. Advanced Micro Devices, which has seen double-digit gains on a year-to-date basis, was also down nearly 6%. The bottom line? Nvidia's shares are trading at 32 times its forward earnings estimates, compared to the industry median of 25.4. It's a towering valuation, and the company will need to deliver a strong enough performance to reinvigorate the market and keep its stock rising. Nvidia needs to do more than just meet expectations to keep its stock rising. How is the market reacting to Nvidia's performance? As Nvidia's quarterly results loom on the horizon, the market is poised for a significant swing. Investors are bracing themselves for a potential roller coaster ride, with Nvidia options forecasting a swing of approximately 11% in either direction following the release of the results. This level of volatility underscores the market's sensitivity to Nvidia's performance, reflecting the high stakes involved. But it's not just Nvidia feeling the heat. The effect of Nvidia's performance is rippling across the AI-focused market. Supermicro, another player in the space, saw its shares tumble by 11.6%. ARM Holdings didn't fare much better, with a drop of 7.3%. Advanced Micro Devices, despite recording double-digit gains on a year-to-date basis, was down nearly 6%. These fluctuations in the AI sector highlight the influence Nvidia wields. As a leader in the industry, Nvidia's performance can set the tone for other AI-focused stocks. When Nvidia sneezes, the rest of the market seems to catch a cold. Amidst these market jitters, it's worth noting that Nvidia's shares are trading at a whopping 32 times its forward earnings estimates. This is significantly higher than the industry median of 25.4. This lofty valuation reflects the high expectations investors have for Nvidia, but it also puts the company under intense scrutiny. Any misstep in meeting these expectations could result in a sharp market reaction. In conclusion, Nvidia's performance is not just about the company alone. It carries significant implications for the rest of the market, particularly other AI-focused stocks. As Nvidia navigates this high-pressure environment, the market watches with bated breath, ready to react at the first sign of trouble. Nvidia's performance has significant implications for the rest of the market. What does all this mean for Nvidia's stock? Let's take a moment to circle back and summarize our conversation. Nvidia's stock rally, which had been blazing trails and turning heads, hit a bump in the road. The stock took a dip of 5.3%, marking potentially its most significant percentage drop in over 8 months. The reason? Investors are holding their breath, waiting to see if the quarterly results can validate Nvidia's lofty valuation. Nvidia's position in the market is nothing to scoff at. The company's meteoric rise, fueled by a more than 40% surge in its stock, catapulted it to the third most valuable U.S. company. It's nestled right behind tech giants Microsoft and Apple, with a market capitalization of $1.79 trillion as of last Friday. That's a testament to Nvidia's pivotal role in the frenzy around artificial intelligence. The expectations for Nvidia's quarterly report are high, to say the least. Analysts are predicting earnings of $4.56 a share, with revenue expected to leap from $6.05 billion a year ago to a whopping $20.378 billion. But here's the rub. The market's reaction to Nvidia's performance was mixed. Nvidia's impressive run this year, which saw it reach new heights and boost gains in U.S. stock markets, could make the stock vulnerable if earnings are less than dazzling. Simply meeting or slightly beating expectations won't cut it. The market is looking for a knockout performance. And it's not just Nvidia feeling the heat. Other AI-focused stocks like Supermicro and ARM Holdings also took a hit, while Advanced Micro Devices recorded a dip despite double-digit gains on a year-to-date basis. So where does this leave Nvidia's stock? Trading at 32 times its forward earnings estimates compared with the industry median of 25.4, Nvidia's shares are certainly not cheap. And with investors on edge, the pressure is on for the company to deliver a strong performance in its upcoming quarterly report. Only time will tell if Nvidia's stock can regain its momentum.